shit, I'm gon' worry about him. Speak quiet, the fears watching. When I see you bringing in my brother, what you say about him? Sadi smoke, all up in his wood, mixed with dead partners. Only call that bitch on 90 face and she the head doctor. Yo, bitch, sleep on it.
What's good, man? It's your main man, Toomuchzae, and we back with another banger, man. Today we'll be teaching y'all how to make money every single time somebody brushes his teeth. I know it might sound crazy, but I'm gonna be teaching you guys in this video, y'all. I'm teaching you guys the exact steps I do in the same way I invest my money as well, y'all. So man, keep tapping in with the channel, y'all. We got a lot of big stuff going on in the month of July, y'all. We doing giveaways. We giving away $100, y'all. So when a random person, y'all, all you gotta do is go follow the IG. You can go subscribe to this channel, like 3 videos, man, and then just repost it on your story, bro. You can be entered. I'm giving away free money, $25 every single Friday. So tap in, y'all. We giving away a lot of stuff, bro. We want to continue to do this every single month, and we dropping a video every single day this month, man. 30 days of Zay, man. So y'all keep tapping in, man. I appreciate y'all tapping in. Let's get straight to the video. Let's get it. Yeah. Alrighty, y'all. So for this video, we'll be breaking up Yahoo Finance, y'all. Alright, to get to Yahoo Finance, it's easy. Just look up Yahoo Finance. Yahoo Finance is a great place to analyze stock companies, y'all. So the company we'll be analyzing today is called Procter & Gamble, y'all. So if you guys go to the 2 page, y'all, on any 2 page, we'll be using Crest for this one. Y'all flip over to the back. Y'all can see right here, it says P&G. That is the acronyms for the company. As you can see, it says right here too, P&G. So it stands for Procter & Gamble, y'all. Y'all can even see the name right there. Y'all see it, Procter & Gamble, y'all. So y'all, Procter & Gamble is a health company, y'all. So, you know, you got companies like toothpaste, Eli Lilly. Like when you go to the hospital, you guys get checked in the hospital beds, y'all. That's Eli Lilly, y'all. So these are different health companies that are in the health sector, y'all. And companies like this are very profitable in the long term because, y'all, we'll always need help. We'll always need help. We'll always need to get better in our healthcare and stuff like that, y'all. So this is a great company. So y'all, we'll be analyzing the company, and I'll be showing you guys how I make money every time somebody brushes their teeth, y'all, with Crest White, literally every single time. So let's get straight into it, y'all. So the stock price right now is currently $151.74 at the time of this recording, which is July 1st. I mean July 3rd. July 3rd, yes. So yeah, y'all, we wanna go. I mean July 2nd, my fault. We're gonna go ahead and get into it, y'all. So this is the main thing. Y'all always don't want to look at the price. Don't always look at the price. We want to come down here and we want to look at the finances, y'all, the analysts, y'all. So let's go over here, and we want to make sure that they're a profitable company. We want to be seeing revenue go up over time, y'all. So each quarter, y'all see, y'all, right here, we have quarters. All right. History of earnings, y'all. So this is the quarter of 2022, y'all. We have the estimate, the EPS, which is earnings per share estimate, says 1.22%. That was the estimate. It was right below it with 1.21, which is okay still, you know what I'm saying? It's okay, it's 1.1% right below it. Then we have the estimate for the second quarter, which is 1.54% earnings per share, and it actually went over its earnings estimate, y'all, which means it was 1.57. And when the earnings estimate goes over, I mean when the actual EPS goes over the estimated EPS, the stock price rises, y'all. That means the company did better than what it was estimated to do, y'all. So let's say we're playing basketball, right? And Curry is projected to drop 28 points this game, right? And he goes in and he drops 31 points, right? His shooting percentage, or his percentage as a player, will go up because he did better than his actual average percentage, y'all. His average percent, if he shoots 30% from the 3-point line, and he was projected to shoot 30% this game, but he shot 33%. Let's say his average percent might go up 0.5%, y'all, because he did better than what he was projected to do, y'all. So as we can keep going, y'all. Third quarter, it was a 1.59 EPS. It did the actual same thing. It did its actual earnings. And for the fourth quarter, the last quarter, same thing. It did 1.32 EPS, but it actually preceded its projections, y'all, which showing that Procter & Gamble, which is the company we're looking at right now, is a profitable company, which is good, y'all, which is great. We want to look at that. We can go to the EPS trend. Y'all see, what do y'all see? Y'all see an increase. This is 2 things you want to see. You either want to see an average or you want to see an increase. I can see that these they average great numbers, y'all. This is great numbers. These are what it's projected to do, y'all. So we can come back next quarter. We can come back in January 2023 of the new year, September. We can come back and we'll see if they did better than what they were projected to do, which I believe they will do, which is why we're reviewing this company right now, and which is why I also think it is a great buy, y'all. So we can also see its growth. Its growth percent is growing 9% each year, y'all. Procter & Gamble is growing 9%. That's what it's estimated to do, y'all. It's growing to 9%. Is projected to grow 8% next quarter, y'all. So stuff like this, 8%, 8.9% next year. So stuff like this is showing that Procter & Gamble is a profitable company. All right, y'all. So we can also go down. We want to break down the finances. Another thing we want to see is that they have great cash flow, y'all. Like Apple has great cash flow, y'all. You want to be able to have cash flow to where they can make extra investments, y'all. Make extra, so new products, y'all. Dividends. They can be paying back shareholders, you guys. Things like this is why we want to look for great cash flow, you guys. To look at cash flow, you guys. And I'm getting better at this, y'all, too. We're still learning. I'm still learning at the same time. We're gonna learn together, though, you guys. We can see that they have a profit margin of 17.69%, you guys, showing that they are a profitable company, which is great. We want to see that they have profitability, okay? Next, we can go to their balance sheet. We want to see how much their total cash is, right? They have a total net worth of $7.6 billion. So they're a $7.6 billion company. And right here is where we see cash flow, you guys. The operating cash flow is around $15.22 billion, and they have a leveraged cash flow of $11.41 billion, y'all, showing that they're a profitable company. So that way, so not only are they profitable, you can see that their profitability is right here. They have a great profitable margin, and they also have a great cash flow. They're a great cash flowing company. Two things which are vital for growth, long-term growth, you guys, which is why I think Procter & Gamble is a great buy, and why I will be buying it as we see, y'all. The next thing I want to go over is the dividend, you guys. So like we said, we went over cash flow, we went over profitability. Next, we're going to go over the dividend, y'all, and their stock splits, you guys. So like I said, if you're a profitable company and you have cash flow, you'll be able to do things like come out with new products and pay investors dividends, you guys, which we love as investors, you guys. Why wouldn't we want to get paid for what we invest into? A dividend, you guys, if you guys don't know what a dividend is, it's for however much you buy the share price at, they will pay you back a dividend yield, a percentage of how much ever you bought it at, and they'll pay you that back either quarterly, monthly, or annually. So monthly means one time a month, quarterly means one time every three or 4 months. I think it's every 3 or 4 months, and then annually is one time a year, y'all. Procter & Gamble they did a stock split of 2-to-1. So for every stock that you did own, you would now own 2 for every one of those stocks. They did that in 2004, and they normally do that when shares get overvalued, guys. A dividend yield of 2.48%, you guys, which is all right, y'all. Procter & Gamble pays a dividend of 2.48% annually, y'all. So for every share you guys buy, not only will you be getting the compound interest and the growth profits of the stock, you guys, but you will also be getting a quarterly dividend, which means every 3 or 4 months, basically $1.94 for every $151 you invest, you guys. So you guys, if you guys dollar cost average, let's just say we dollar cost average. Let's bring up a calculator. Let me go to calculator. Let's say we dollar cost average. So let's say we could buy the stock around 150. We could wait for a little pullback, a drop down, or anything like that. As you can see, it's closer to its 52-week high, which is 158, and it's currently at 151, and its 52-week low, which was at 122. But we could dollar cost average to still get it at a great price, you guys. So let's say we buy it at $150, y'all. Or we could go, I ain't gonna lie, I'd probably go rather 147. You can wait for a little pullback, stuff like that. You guys just want to be patient in the market. So let's say we do that. Let's say we have a monthly income of about $2,500. Like I said, I just posted a video about that. Y'all can go tap in. Make $2,500 a month as a young entrepreneur. So let's say we dollar cost average, and we can be able to afford, we could say, let's say 4 shares per month, guys. 4 shares every month. at this 147 price. So that's for a one whole share, you guys. Whether the price goes up or down, we want to know, y'all. I want to know over time. So we're just gonna do over what it will be currently. Let's say we buy about 5 shares per month out of our $2,500. That is $735. That's a lot, y'all. I ain't gonna lie. Let's just do 2 shares. Let's do it 2 shares. Okay. We could put that about $300. Yeah, barely 10% of your income, y'all. Barely 10% of your income will be invested in just Procter & Gamble stock. And like I said, you guys want a dollar cost average. So you guys want a dollar cost average into a mutual fund, an ETF, and an individual stock, y'all. And either a health and tech sector, you guys. And you guys want to have a big index fund or ETF, you guys. I'll be going over that in another video as well, too, guys. So stay typed in, guys. So let's say we do that about $300. We buy about 2 shares. And we do that every single month, y'all. Let's say we do that every month for 3 years, you guys. For 3 years. 3 years straight, y'all. Because it's 2023 right now. Let's say we do it for 2026. That is 22 shares a year. Because 2 times 12 is, I'm lying, y'all. It's 24. My fault. I was thinking 24 shares per year. Times 3. You guys will have 72 shares over the span of 3 years, you guys. 3 years. Let's look up their average growth rate. So we could just look up, we'll just look up from what they grew for 3 years in the past, okay? So from 2023's current date, we'll say it's at 150. 3 years ago, in 2020, it was at $102. At the bottom of the bear market, it's $102. By the way, a bear market means the market is low, the whole market in general. So a lot of stocks are lower and cheaper. $102, y'all. So we have 72 stocks in total. Let's say we can go back. So 72. No, my fault, y'all. So let's get 102 times R2 would be 204. So to the $200 it was compared to 3 years ago, it's compared to $300 now. All right. Let's time that 204 times 72. So we'll have 72 shares, right? Will equal to $14,688. I kind of want to round that number up because, like I say, y'all, we get paid dividends as well. You might see more growth, more spikes and stuff like that. So let's just round this number up to 1,500. Okay, 1,500. And the share is currently at 150 right now. So 150 to the $100 it was worth in the past. That's a $50 difference, y'all. So that's what percent is that? It's crazy how I don't know the percentages, y'all. 100, like, what's that? 50.5, y'all. So 0.5, 50%. Oh my gosh, how did I not know that? 50% return, y'all. So 50%, it grew 50%, you guys. So let's say this at a 50% growth rate. Let's do that 15,000 that we got. 15,000. Let's multiply that by 50%, y'all. Over 3 years. 3 years, y'all. Over a 3-year time period. Because it grew 90% totally in 5 years, and 3% it grew 50%. So let's do that. And over the 3-year span, y'all, we will be making $7,500 on average. $7,500. That's on average. That's expected. So this is basically guaranteed, y'all. And like I said, y'all, when the stocks go over what they're projected to do, like we can go back to analysts, when they're projected to do, they're estimated to do these numbers, like EPS, they're estimated to do 1.54, they're estimated to do 1.32, and they exceed it, the stock goes higher, y'all. So we can easily round this 7,500 up to 10K, 70, anything like that, y'all. So we'll get an extra $7,500 over 3 years, or we can say even an extra 10K, just by investing a little $200 a month. $200 a month for 3 years straight will get us an extra $7,500, y'all. 50% on our return, y'all. And no telling how much, when your income increases, you can dollar cost average more, y'all. So let's say instead of making $2,500 a month, you make $5K a month, y'all. So all you gotta do is just multiply this number by 2, because you're making 2 times the amount of the income, y'all. Instead of having $7,500 in 3 years, you make $15,000 in 3 years, y'all, in passive income, y'all. This is why we invest our money, you guys. This is why we pimp our money, you guys. We have our money work for us, you guys. You don't want to keep working for your money. It's not how to get generational wealth. That's not how you improve your wealthy. That's not how you get wealthy, guys. You guys have to work smart, you guys. Work smart and have your money work for you guys, y'all. And this is how you do it, y'all. We invested into Procter and Gamble, you guys. I'll be buying some more stock in the near future. I'll probably be buying some stock on Monday, you guys. I will be purchasing what I buy. I will be showing you guys what I buy more. I'll be doing screen recordings, y'all. But this is exactly how you make money every time somebody brushes their teeth. It may sound crazy. It may really sound crazy, but y'all, Procter and Gamble, it's right here on the thing, y'all. It's proof. The proof is in the pudding, y'all. And I'm showing y'all the company right now. This is why we invest our money. Keep investing, y'all. Keep growing your pockets, your mindset, your knowledge, y'all. And I appreciate y'all for rocking, man. Hit that like, hit that subscribe button, man. We doing a $100 giveaway, y'all. It's in the description. Y'all just go over to my IG, follow me on IG, subscribe, like 3 videos. Post a story, y'all. I'm giving away $25 every single Friday for the whole month of July. And we dropping a video every single day. Every day, y'all. 30 days is it, man. I appreciate y'all for rocking me, because I'm rocking with y'all. And I'll hit y'all boys in the next one. I'm out. Peace.